is right here. You're welcome to another day with an ICT Forex trader. All right, shout out to all the subscribers, those that have been subscribing, those that have been commenting, those that have been liking our videos. I really appreciate. Thank you for 100 subscribers. So let's get it to 1,000. Okay, please, if you are new to this channel, do well to subscribe. Please do well to subscribe. Okay, also like our videos. So that YouTube can actually make it reach to other persons. Okay, so as you all know, I document my trades here. I also teach you some trading tips that are going to enhance your profitability, right? I'm an ICT trader. I trade just one pair, and which is Eurusd with the XY, right? And I trade just one model, just one ICT model that changed my trading game, right? I'm going to teach you guys a trading model that changed my trading game. I'm going to teach you guys, right? And as you all know, price books majorly based on liquidity. It's a new month already. It's a new month. Happy new month to you all. So we'll be going to the chart. We'll be looking at price from the higher time frame, from the monthly time frame. Let's see what price is doing. Let's see where you think price is joining to next. Okay, where we will be trading directly to. So it's a profitable month already. So we're going to be making the most, right? So we determine the directional bias, the likely directional bias for the month, the likely directional bias for the week, and also the likely daily bias. Okay, then I'm going to be showing you guys how we'll be trading, okay, based on my entry and also based on your own personal entry model. Okay, as you know, price books majorly based on liquidity. So every single week we come to determine where is the directional bias for the week, okay, and how are we going to maximize the moves. Okay, I want you to know that price books majorly based on liquidity. Okay, price is not random. It books majorly based on liquidity, from internal liquidity to external liquidity, and vice versa. Always on repeat. Always on repeat. Price books majorly based on liquidity, from internal liquidity to external liquidity, and vice versa. So we'll be going into the price and determine where price is coming from, where price is currently, and where do you think price is going to draw to next. Where is the next drawn liquidity? Okay, so whenever you get to the price, you always start from the higher time frame so that you'll be able to determine the direction bias. Okay, once you determine the direction bias, the next thing is to go to your entry time frame and trade in this direction. Okay, you trade in this direction. So guys, we'll be going into the chart right now from the higher time frame. Let's see what price is doing. Let's see what price is doing in monthly perspective. Let's see what price is doing in the weekly perspective. Let's see what price is doing in the daily perspective, and how are we going to make the most from there. Okay, so let's go to the chart, guys. So all right, guys, you're welcome back to the chart. Okay, currently we are on the XY, that's the dollar index. Okay, you know, as you all know, the XY just like it drives the major currencies. It drives the major currencies. Okay, once the XY is bullish, the foreign currencies will be bearish. Foreign currencies are XSX USD pairs. XSX means foreign the currency before USD. Okay, it represents the currency before USD. Like example, Euro USD, GBP USD, AUD USD, and the rest of it. Okay, so whenever the XY is bullish, this foreign currency should be bearish. Whenever the XY is bearish, they should be doing opposite thing. And you need to know that Euro USD is the most correlated pair with the XY, okay, and that's the only pair I trade, okay. So maybe after analyzing the XY, you can actually use it to trade any major pair that is of your choice, okay, or you can also use it to trade other assets that maybe correlate with the XY. All right, so let's go into the chart. Let's see where price is coming from, where price currently, and where do you think is the next draw on liquidity. So we are going to be looking at the daily time frame. Okay, we start from the daily time frame, right? We start from the daily time frame. Price books measured based on liquidity. I want you to know that as always. Okay, maybe I'm going to do a series on the institutional order flow, how price books based on institutional order flow, right? And you're going to learn a lot. You're going to learn a lot. Okay, that's why you need to subscribe, turn the notification bell so that you always be notified anytime I post on my YouTube channel, right? So looking at the daily chart, you can see that price here, the institutional order flow is bullish, okay? Or you can see the market structure is bullish. You can see price have expanded to the upside, created a break in market structure to the upside, now returned into internal liquidity. I told you guys that price books majorly based on liquidity. When external liquidity is taken, the next thing is to look for the opposite dual liquidity, which is the internal liquidity. It can either be FVG or other block. That's the two major internal liquidity I look for. There are other examples, okay? Other examples, but majorly I look out for gaps. Okay, these are gaps.
and also an order block. Okay, so price returning to this gap and expand to the upside, that just like we anticipated. Okay, if you check one of my video last week, you see I expected price to return to this, and you can see it just happened and deliver to the upside, taking the buy side liquidity. Now this week Friday closed as a contraction candle. What is contraction candle? Contraction candle are candles with small body range. Okay, they are candles with they are candles with small body range. So this candle, this is a contraction candle, right? So this is a contraction candle. So whenever you see a contraction candle, your next expectation is an expansion in line with what institutional order flow. And institutional order flow here is still bullish. Institutional order flow here is still bullish, you understand? Because buy side liquidity is taken, price return to this order block. You can see this order block right here. Okay, then close as a contraction candle. Then where's the next zone liquidity? To the upside. Do you understand? So that's why price a contraction candle expansion to take the buy side liquidity. So on the daily time frame, the next zone liquidity is this gap right here. You can see this gap here. As you all know, price books majorly based on liquidity. So buy side liquidity taken, I'm expecting price to reach for this gap right here, guys. I'm expecting price to reach for this gap right here, okay? Because this one popped into this gap. You can see this gap. Then the buy side liquidity is taken. I'm expecting price to draw into this gap here, right? That is the expectation on the XY, and that is the daily directional bias. So that's why I am bullish on the XY today, which is Tuesday, and bearish on Euro USD, right? So now let's go to the weekly time frame. Let's see what we have. Let's go to the weekly time frame. So this is the weekly time frame right here. Okay, you can see price books majorly based on liquidity. This sell-side liquidity is taken. You can see this relative equal low have been taken. The two relative equal low have been taken. Where price it came from this FVG, then took it out. Now return to this FVG. So where is price currently? Price just take out an external liquidity and it return into an internal liquidity, which is a gap. So, and this is the weekly time frame. Okay, it have filled it completely and reaching for this other block. You can see these two candles right here. So these two candles right here. So these are order blocks. So these are order blocks. Okay. Let's see, these are order blocks. Two consecutive candles. These are order blocks. So price is reaching for this order block. So at this point, I'll be expecting a reversal right to the downside. I'll be expecting a reversal to the downside. But I want us to check out something. You know, monthly time frame is more significant than the weekly time frame. Weekly time frame is more significant than the daily time frame. Do you understand? So with that, I want you to see something. Let's go to the monthly time frame. I want you to see something. Checking from the monthly time frame, price is coming from an area of liquidity, which is an average. You can see this gap right here. Right, you can see this gap right here. So price is coming from that gap. Okay. So you can see price popped into this in form of manipulation, right, to clear this relative equal low. You can see this relative equal low resting here, okay? There are a lot of others that were resting there. So the institutionals wish to clear them out before it reversed. It will reverse, okay? That's it. So you pay attention. I want us to understand something so that, like, but remember, everything we do here is just based on probability, okay? Probability. Price is always probabilistic. Our own is to make money, and you don't need to be right or wrong before you make money from the market, okay? According to Mark Douglas. So equal lows are here, and price filled and internal liquidity. Remember, from the monthly perspective, an external liquidity was taken. You can see this high was taken, and price returned into internal liquidity, poked into it, okay? And it was a form of manipulation. It takes this relative equal lows and closed above the line. So there is every probability we'll be expecting an expansion to the upside to take out this previous month's high. Okay. So there is high probability based on this for price to expand to the upside to take out this previous month's high. Do you understand? So I think that's what I'm looking at in the market. That's what may happen. Okay. But regardless, I'm not a position trader. Okay. I only determine my direction from the daily time frame. Okay. But I'm trying to draw our attention to this so that there is high probability that we'll be seeing a reversal to the upside here. And you can see there is a wide gap sitting above here, and you can see this buy side liquidity resting here. So price may be reversing to the upside to take it out. Okay, so now let's go back to the weekly time frame. So I'm trying to point out those things so that you understand where price is coming from in the higher time frame perspective. Price is coming from the monthly FVG and is going to the upside. So there is high probability if this FVG here is not defended, if it didn't hold price, there is high probability that this high will be taken. Okay, so that high will be taken. This high right here, buy side liquidity will be taken. And once this buy side liquidity is taken, then definitely you will be seeing price in this gap right here to take out this buy side liquidity and into this gap. So that's what I'm looking at in the weekly and the monthly perspective. Okay, I'm anticipating reversal, but for now, this week, because the previous week week I have been taken, I am bullish this week. Okay, on the EXY, I'm bullish. I'm expecting a bullish close this week. Okay, for now. Okay, but after the weekly close, then I will determine where price will be going to next. Okay, we need to be trading bit by bit as the higher time frame candle unfolds. You understand? Okay, so now previous week high is taken, price may be going to the upside. If this other block couldn't hold price, then this buy side may be taken. But for now, ideally, I'm expecting a reversal to the downside. But till then, I am more bullish this week. Okay, but you need to understand that you only need to identify the higher time frame or other liquidity areas. Once you identify it, then you go to your daily time frame and be determining your directional bias every single day, right? Based on drawn liquidity. So the drawn liquidity right now is bullish. We are going to the upside to fill this gap right here. Okay, we are going to the upside on the XY to fill this gap right here. So if this gap is not defended, maybe it couldn't hold price, then price will likely be taking this high. Okay, but we take it bit by bit. The next drawn liquidity is this gap right here. So with that, now you can see we go to the daily time to the to Euro USD, and you can see price books majorly based on liquidity. Sorry, as you can see, price books majorly based on liquidity. Price have just as we anticipated last week, price have popped into this high. Then you can see this FEG gap right here. You can see this gap right there in form of internal liquidity popped into this high, expanded to the upside, take out this low. Now you have returned into what this other block. You can see this daily other block. It popped into it, and this previous Monday high, which is yesterday high, sorry, yesterday low was taken. So as yesterday low is taken, where's the joint liquidity? To this sell side liquidity and into this gap. Okay, so tomorrow now I'll be bearish. I'm bearish tomorrow. I'll be expecting an expansion. If I'm bearish today, right? And I'm also bearish tomorrow if the drawn liquidity is not met. So I'll be selling it into this gap. So once price reach this gap, then I'll be expecting a retracement, okay, into this other block. Okay, that's how it books until there is a change in directional bias to the upside. Do you understand? So for now, I'm going to be selling into this gap. Okay, then when a swing point is formed, swing point is made up of 3 candles, like one. Let's use this candle as an example. You can see this one candle, 1, 1, 2, 3. So the center candle, the low of the center candle is the lower than the low of the right and the left candle. Okay, so this is called a swing low. So it is used to identify reversal. Whenever it happens, you should be expecting price to expand to the upside. So whenever a swing low happens, you can see price is going to the downside. Okay, so that's what I'll be looking out for. So I'll be selling into this any swing point, then I'll change my direction to the upside to trade into internal liquidity. But because of the external liquidity, like the higher time frame, there is higher chances that we may be seeing a further expansion to the downside to take out this sell side liquidity. But till then, we trade as price displays. Okay, so that is it, guys. That's what I'll be looking out in the weekly time frame. So in the weekly time frame, I'm expecting a reversal, though it is not that strong. Why? Because price is coming from the internal liquidity of the monthly time frame. Okay, but we'll be taking it bit by bit, and I'll be updating you guys as price delivers. Okay, so for now, I'm bearish on Euro USD. I'm expecting price to deliver to the downside to take out this sell liquidity then into this FVG. Then I will look out for reversal if there is reversal. But if there is no reversal, I will keep selling until this sell liquidity is taken. But if there is reversal, I will buy into this other block. So that's how I'll be trading this week, guys. That's what I'll be looking out for in Euro USD. Okay. All right, as you all know, I am bearish today, which is Tuesday, and I just missed an entry in the morning. I missed an entry in the morning, okay? And the London Q zone, all right, I was expecting this high to be taken, and it did. Then a shift in market structure, and price couldn't return to this FVG, and can see it's delivered over 1:4.8 IR, but it actually did that without me, but it is normal. Okay, it is actually right. It is normal to miss entry. It is normal. You always miss entry, right? It's normal. So you need to accept it and move on. Okay, me, I have accepted it. Now this is New York T zone. I'm expecting this high to be taken. Okay, I'm expecting this high to be taken. Once this high is taken, and I'll be looking for shifting market structure and expect a continuation to the downside. Okay, so I expect this high to be taken, shift the market structure, and a continuation to the downside. So that's what I'm looking out for this afternoon. Okay, so let's see how price delivers.
All right, guys, that's what I'll be looking at on Euro USD and the XY for the week. Okay, so on Euro USD, as I said, I'm bearish. Okay, I'm bearish on Euro USD and I'm bullish on Euro on the XY until the first drawn liquidity is met. Then once the drawn liquidity is met, I will definitely update you guys in one of the videos when we see any reversal pattern. Okay, maybe to the opposite direction. Okay, and I think you have understood how price actually how I'm able to combine the monthly time frame and the weekly time frame in terms of determining the direction bias. Okay, if you look at the monthly time frame, you see there is high probability that we may be seeing a reversal to the opposite direction because the drawn liquidity have been met. Okay, so that's why you need to be careful because we may be seeing a reversal. But meanwhile, we as a day trader, we always use the daily time frame to determine our direction bias and trade in that direction as the high time frame candles closes. Okay, so it's going to be a profitable week this month, or it's going to be a profitable month, right? So you need to put in your best, you need to focus on the process, right? You need to focus on the process. So okay, see why most person fail is because we are more busy chasing money. Okay, we are more busy chasing the outcome, right? So but if you focus on the process, if you focus on the process, journaling, having a trading plan, doing pre-market analysis, reviewing your trades, and adjusting, you will see how far you can grow. Okay, as you all know, I want you to understand that the probability you seek is actually in your mind. The probability you seek is in your mind, right? So, for you to become a profitable trader, you need to build your psychology. You need to build your psychology. So I want you to have good psychology this month so that you're going to win. Okay. Instead, focus on few trades setup. You don't need to be trading a lot of setup to make money. You just need setup that works. Okay, if you have only one setup that works, stick to that one setup. If you have two setup that works, stick to it. But you don't need to be trading many setup. Okay, just few setup, one or two. Okay, then one or two pairs. Then you see how far you can go. Maybe when you're consistently profitable, then you can be trading other pairs. Okay, but I wish you all the best. I want you guys to make money. Okay, you're going to be making money from the market this month. So you're going to be profitable this thing. So make sure you manage your risk properly. Make sure you follow your trading plan. Some of you don't have trading plan, so we need to have trading plan so that we make the most. I think because this is what are making me profitable, right? Once I have my trading plan, solid trading plan, and I discipline myself to follow my trading plan, that's when I started having a consistent curve, right? Though we are not blown, but we are getting there already. Okay, with time it's going to manifest, right? So guys, I know you have learned a lot from this video. Till another time, I wish you good luck and profitable already. Yeah, make sure you subscribe to my YouTube channel right now. Subscribe. Bye for now.